Good evening, good evening. Welcome to our live Facebook as this is our disclaimer and a special reason to show this and the beginning of our live Facebook. All right, let's get started, and I don't want to delay too long and also give you and share with you some of what's really happening in the market now as we've seen little bit of correction, little bit of sideways movement, and more importantly, many of you are really asking, can the market go higher? So the topic I'm going to touch upon this evening, we'll talk about the stock valuation. Why high stock valuation will always generally lead to sudden market correction, which we did have early on in the July and August time frame in here. But many of you are also asking, could this also be happening to our Bursa KLSE? As many of you are really the big Bursa fan, but I do say that this year a lot of the potential winning do come from the US market, and I'll break it down all of this in tonight live Facebook talk about valuation. So let's get started, shall we? All right, and of course, those of you who are with us, and if you have any question or stocks that you want us to review, just pencil in the comment. I'm happy to hear and give you what I think about. In tonight's sharing session, we'll talk about market valuation, which means usually what is the current valuation of the market, both from the US side as well as from the Bursa Malaysia side, and whether a pricey or a cheap market valuation. And what does it mean? Can the market still maintain the expensive market valuation, which we usually see institutional and fund manager use this to price whether they want to be in the market, especially in our Bursa Malaysian market, or stay out? That's also explained the big swing that we see generally if when the pricey market valuation you have. And also this week you already seen the big movement that we saw in the Hang Seng market, right? The Hang Seng market, and of course we had the correction just came back I think on today's Wednesday, on Monday, when the Chinese came back from the national holiday, and the market sell off almost 9% in here. That's kind of very important to have the overall sense of this market. And also we're looking at the US interest rate cut, all right, as well as the US election on the market valuation we see. And also we want to look at some of the popular analyst stock trade idea, like from the our local broker houses, and see how well they fare over the last 2-3 weeks. All right, let's get on to it. And of course, so we are very happy to announce that Trade VSA, which is I'm one of the co-founder, we've been granted the first digital investment advisor license holder. So that is from the Securities Commission Malaysia, so which means I am protected, right? So the this is a sense an achievement for first in Malaysia for a software analytic powerhouse in the fintech area and in the regulated activity of investment advice, all right, pertaining to the stock market. So that's something that we are very proud of. Now let's break it down firstly in the global equity performance. Okay, if you look back in the last 5 years, let me just bring up my my pen here. I'm just going to share with you, right? You can see definitely no one is ahead with the what we have seen with the US market. And you can see back, if you go back to 2019, US has been one of the strongest level here. You could see here, this is where almost 183, and behind it is the purple, which is the European market, and then Japanese market in second half of 2023, they're picking up. And you can see emerging market, which is our Malaysian market, hasn't been doing well since the COVID. Now if you look very deeply why the US market has been doing so well, is because of the economy that they have, and also the dominance on the generative AI technology that we've been doing, all right? So the AI technology with the good valuation which they had in the US with the PE quite reasonable, and you've seen the Magnificent Seven over the last 18-19 months been dominating in here, and I'm going to share with you in the next slide why this will continue to persist, because that's going to really give into how the market valuation is really not expensive at this point. So this is going to give you a little bit sneak preview. It's not expensive, so that would only means the market can go higher. Now this is kind of important for those of you who want to understand for further implication of the market, why it can go higher. And I suppose many people fail to understand this point, and usually they stay out of the market until one point, what we call the FOMO, fear of missing out, and then they would probably just jump into the market and buy, and that's really it. Now if you look in the history, what you see on top in here, we really want to map back in 2000 to 2002. This was the first what we call the big, very ugly market correction during the dot-com crisis. Okay, so this was the dot-com crisis. The market fell 95%, and then we have another one, right, which was I think that was the Russian-Ukraine war, where the inflation came in, and the tech sector, which did go higher after the COVID. You all remember that, right? Where, you know, everybody was stuck in their home, they could not go out, and then we saw people immediately buying a lot of mobile devices, laptops, to work from home. And then once the market did open up, then we saw the Russian-Ukraine war came in, inflation started, and then US raised interest rate and local also raised, and then we see the big collapse. Then come to early November, I believe it was November 2023, we saw another market started to move up, where the generative AI, and that's why we call it the AI bubble. So a lot of people are talking, hey, this kind of high valuation, right, will we see the correction that we are seeing right now? No doubt in the month of August, the 4th of August, some of you may have seen it. We have the global sell-off, right? And immediately within a week, the market correcting. So right now we are at that crossroad, which I did talk about 2 weeks ago, where we are, and likely this market is going to go higher because we have the Q3 coming up, right? The Q4 2024, which usually are the bullish months. Okay, so that sort of give you the current situation. Now, of course, we also want to compare the equity versus the bond. Even bond prices also go through that very painful correction that you see here. The long bond has been always traditionally up, and when they start to play around with the interest rate back in early 2020, you can see bond prices really fell, right? Whereas the S&P 500 going up. Now right at the bottom, pay attention to the 1987 crash, and then we also have the dot-com crash. That was the more of the modern US time, where we saw the market crash in here, and the respectively after the pandemic 2022 market started to move up, where people are saying this technology, and right now we have the generative AI, may not be sustainable. But let's take a look at the facts that is being presented, because once you understand some of these facts in here, you may even hold the ball longer. Okay, now first thing I want to talk about is the Magnificent Seven versus the 2000 tech bubble. Now remember, the 2000 tech bubble is this red circle line here, where the market really falls a lot, and of course everything what goes up must come down. But don't be fooled. Even though if you look from here, the Magnificent Seven, this is a cutoff from the Visual Capital, talk about the percentage of the market cap. Now if you look back at the tech bubble back in the year 2000, you have Cisco, Intel, Oracle, IBM, Lucent, and Nortel. None of these guys are already here, right? Nobody. Now you have the Tesla, Meta, Alphabet, only Microsoft stay on, right? So you can see from there in terms of the percentage of the market cap here, right? And that's 31% and 19%. But what I want you to pay attention is these two figures, all right? These two figures is the PE, forward PE, and the forward PE back in year 2000. So you look back in these two Magnificent Seven, right? And the net profit margin 28% and 16%. So there is a difference. That simply means the Magnificent Seven are profitable. Despite why the market is going higher, compared to the 2000 tech bubble that we see, the profit margin was not that healthy, only 16%, but this time the net profit margin is 28%. So don't be fooled. My point is, this rally that you're seeing, eventually it's going to break up soon. It's going to lead to higher market. And of course, the kind of volatility that we see right now is also due to the US presidential election, which will be happening in 3 to 4 weeks, which is November 5th. All right, so keep in mind, they are not expensive. The point is, the Magnificent Seven, if you look around from the things here, they are not expensive. The 24 months forward PE, the most expensive one is only Tesla. The rest are pretty reasonable. If you go back in Cisco, almost 101, Oracle's was 84, and that's why we got this 52. And right now, the Magnificent Seven, as of the 7th of September, right, it is only half of what we've seen in here. All right, so these kind of facts is important why this market will likely to rally further. Okay, and of course, these kind of things usually the public don't pay attention until the market goes higher. When it does, it's time to sell. So that's why if you look in here, a lot of people were comparing back in the 2000 where the Cisco, right, which we saw just now earlier, about 107, right, and compared to Nvidia, which is only 24 times. So that is a difference, because people are looking what happened to Cisco in 2000 during the .com, and Nvidia is happening in here almost 4,000% the price go up. So will it have the same fate as Cisco, which is a network router? But I don't think so, right? Now, because a lot of people tend to compare the price appreciation, like comparing Apple to Apple or Orange to Apple, but in actual fact, they are not. They are two different beasts altogether. Cisco, as we know that, they are into routers, but Nvidia is making one of those GPU and chips that is used to power a lot of the data centers and a lot of the LLM, which is a large language model you see today, powering a lot of the ChatGPT, and eventually we will see more of this. So it's not fair to compare Cisco to Nvidia, because they are both in different situations now. So of course, the truth is in front of us. It's important that we choose our own emotion, right? So as the market go higher and higher, as you can see from here, in the year 2000, which is during the .com, right, the PE, just now we were saying, actually went up to about 50%, but right now it is still shy what we reached in year 2000, which is about almost a quarter of decade ago. So that tells you, right, do we should be fearful? Yes, but not overly fearful, right? We should be fearful, but not overly fearful. That's the kind of right tone that you should have. So that's why we want to use FOMO to our advantages. And now remember, FOMO, it happened to everybody. And if you are one of those investor and trader who constantly use of fear of missing out, and because when there is greed, there is excitement, people buy. And that's usually a lot of beginner trader will have this experience. They don't like to buy alone. They want to buy when everybody is happy. As I said before during one of my talks, right, when there is high volume and good news, is it time to buy? Definitely no. It's time to sell. It's a time to sell. And this is a time where there is a bit of anxiety, right? Then you want to be really buying. And the cycle tend to repeat itself. Don't use FOMO, because it will definitely make you poorer. Now again, if you look at the S&P 500 PE ratio, like I said before, in year 2000, it actually hit somewhere around the 42 marks. And right now it's only 30 times, okay? 30 times, which is still expensive, but because of the margin, which I shared with you just now, right? Almost the margin is 28% compared to the bubble tech way back was only 16%. So this also justify why the market can go higher. Now let's talk about the recent US interest rate cut, which was the 50 basis point, which is in end September, but there are talk now there will be or a smaller interest cut, or maybe no interest rate cut. What does that mean? Now if you look at the S&P 500, what typically happen after the interest rate cut here, you can see the first 3 months we will see a little bit of a market movement because the last time they cut it was 2019, right? 2007, 2001 is different. So you really want to look at the interest rate cut. But if you look back, after 6 months, you have a 13.3% S&P 500 movement, and 1 year is 14.5. The interest rate cut just started in September. So the last 3 months, it will move very, very slowly. But in the next 6 months, and that will be after the election, should either presidential candidate, which is either President Trump or Kamala, you will see a 13% move in the S&P 500. That also means our KLSE Malaysia stock index will also go higher. What do you think, the audience who is listening now? I hope these facts will clarify why this market can really move up higher. Now, also people talk about so-and-so US presidential candidate were to win. And some people did say that if Kamala Harris, let me see, presidential. Okay, so someone said that if Kamala Harris win, then the stock market will collapse, all right? Or if Trump win, the stock market will collapse. Either different version, but the truth is the market always go higher. Now, if you look back in the S&P 500 before the election day and after the election day, even the last 3 months, right, if you take the average, we will see the market dip. So right now, it is just doing what it's supposed to do. You can see S&P 500 ready, just 1 more month. And after 1 month, now the election over, on the election day, I expect the market to sell down. Okay, but the next day when the result about to come out, you will see the first 3 months, this little sucker, the US S&P 500, the US Nasdaq is going to move up. So which means a lot of your stocks that you see currently on the KLSE as well, the US market, will continue to push higher and move higher. That is also very important where this market can actually move up in here. All right, so this does put a lot of facts behind the model why the market can go higher. And you can go back to 2020, 2026, everything push upwards. Okay, so let's still look at the year-to-date return on the ASEAN market. Okay, this is something I think many of you have seen. So far, Hang Seng market has really moved up a lot. Okay, and that's why we are seeing this market move up to 21% also, right? So at 21% in here, this is where we are, and a lot of this movement actually happened at only the last 1 week. So Hang Seng actually moved out almost 35%, right, overall, but the net effect on year to date is 21%. Then you have Nikkei has been very steadily going up at 17%. Malaysia is not too bad at 12% in here. So a lot of the ASEAN market doing well, except with Jakarta, right? I think Jakarta has some issue with their political situation, and that's why we are seeing this one in here. Now, you may not know, going back to last week, right? We actually have what we call the big move in here. Now, let's turn our attention to Hong Kong. Now, as soon as the good news comes out, as I said before, always good news. Goldman Sachs said the surging stock market may advance another 20%. Right, that came out on 7th October. That was 2 days ago. Immediately the market come down. As I said before, what I've said on I think on Tuesday, the CPE cost, right, which I talk about VSA and fundamental. Why does good news high volume market falls? And right now, this kind of news is actually very classic, set up by smart money to attract a lot of the unsuspected people to come into the market in here. All right, so usually good news, when you see like that, it's time to take profit. Okay, time and time again. Now, let's take a look also on the big brother, which is the US market. You could see Dow Jones continue to stay 11%, S&P 20%, Nasdaq is 21%. We still got another 10% move from here onwards. Mark my word, with the presidential election going higher, this will push the market so and so forth. Right, year to date, right? And you can see the KLSE, which I've shared with you in here, 12%, 13%, Nikkei 17%. All right. Also, let's take a look at the valuation. Now, just now we saw the US valuation is about 30 times. You can see S&P 500, which is around here, the 30 times on S&P. But if you look back currently, which is about 2 months ago, it is still around the 25. Now, compare to the Taipei, Kospi, and Nikkei. The KLCI, which is the green one that you see just above here, right? Yep, this one here is still very reasonable, around the 13 to 15 times PE, which means our market valuation does justify this big market movement in here. But let's take a look at the chart right now. Is the Bursa KLCI is not going any higher. So let's look into our local big boys. So far, we look in terms of the PE. So you can see from here, we have the PE of our bigger, largest cap, which is 126 billion, which is Maybank. Then we have Tenaga, 85 billion, and then we have IHH Healthcare, right? So you can see both of these 13 times, which is what we saw for our FBM KLCI market valuation. 23 times for Tenaga, because Tenaga is going higher due to the data center and the need for more energy to power them in the coming 2 to 5 years. So a lot of contracts been signed. You may already hear that Microsoft did sign a contract with Tenaga to provide energy for the next 5 years uninterrupted for their data center, and also the growth in healthcare, which IH Healthcare been going regionally to acquiring all this. So that is really focusing on the focus market in here. So these local big boys, their PE is still reasonable, not too expensive, right? So having said that, no surprises, our market still has room to go higher by looking at the fundamental what we see in this market in here. Now, of course, we're going to look at the VSA 360 market indicator. We are going to be looking at the KLCI. We will check out one sectoral analysis, which was actually mentioned by the by one of the local analysts in here, and that sector is actually property sector. All right, so you don't want to be reacting to it, but you want to anticipate the market as it comes. So we're going to be looking at US market, but definitely you want to look at wicks, right? Plus Magnificent 7. Those of you who want me to look at Magnificent, let me know. And also we will be looking at this week Analyst stock pick group. All right, so first of all, let's take a look at the US weak market. So you can see from here, the US weak, the fear index, we are already having a resistance, okay, a resistance here and the resistance here, which is at 21.4. So usually when you see resistance, what happened? The resistance top, market goes down, right? If market goes down for the fear indicator, which means stock price is going to move higher, all right, because it is an inverse relationship. So that already tells me stock market, the US market is going to break higher. Let's take a look at the US market as we go on. Okay. So for start, we want to look at KLCI. No doubt you can see the KLCI. Usually those of you who has been following me, I did talk about what we call the market. Okay. So we are in the stage 3. Here you can see here it is stage 3 distribution. Okay. And right now we are seeing this market started to fall down. And if the market were to break below the 1630, right, then we will see a stage 4, okay, stage 4 markdown. Now, one of the things to justify that I don't think the market is going to go lower, as I said before, the valuation in Malaysia overall is still very low. Okay, of course, if the market go lower and break down the 1630 level, then our PE will be even more reasonable, more favorable, and people may find that this is really a discounted stock market and may want to pile in there. Hello Nora, thanks for coming. All right, so right now the market is actually going into a stage 4 in here, but we have an uptrust, and usually uptrust that doesn't look good. Okay, so we still need those foreign funds to come into a market to start to buy here. All right, now let's take a look at the US market, and this is what I talk about in here. So same thing with the US market. If what we see here, okay, is the current stage 3, then the market will eventually break down. But what we may likely to go from here, this is a stage 1 reaccumulation. So with this reaccumulation, what we'll normally see is the potential of the market to break above 42,000. It's already there, building a nice ground. We got tests, we got spring again in here. These are sign of strength. And for those of you who came on on Tuesday, the 10 my CPE SIDC point, you will notice these are actually sign of market ready to go higher. So keep in mind, Dow is going to go up. All right. So let's move on to the next one here. And we also have a very similar picture. Let me just bring it back up. Okay. So here you have the market just sort of moving sideways, and it's going to go up too. All right. Similar. Let's go to the next one. The Nasdaq. Now, Nasdaq has turned red pentagon because of the correction that we've seen on the sensitivity of the interest rate. But if you look back on the old high that we have here, let me just draw this line here. Right, this is definitely a point that they have to break, but definitely breaking back to, it already broke back to the 20,000, that which is kind of very positive going forward, right? And then just wait for the green pentagon, which will be coming soon. Akan datang, all this market's going to move higher and so forth. So that's really one of the big benefits of our Pentagon guiders. Now, also not to be miss out is also Hang Seng. So if you've been following Hang Seng, definitely if you use the Pentagon guider, right, then you would probably pick it up here, and not at this point where we have red Pentagon. Remember the news I just shared with you? The market can go up another 20%. Is basically a sucker game. They want to suck you in and then get you to buy the market. But if you have a Pentagon guider, you will stay within the market and avoided a lot of this news. So this is definitely one good tools. And if not, right, SC may not award us the digital investment advisor because we have proven the case. Pentagon guider does its job very, very well. All right. So let's also look into the Ringgit. Now, a lot of people talk about Ringgit. We're going down to 4.12. But in this live Facebook, I always mention our ringgit is correlated to the Chinese yuan, so nothing of so much that we say that our economy doing well, or people spending money, or tourists coming in, to Malaysia and they're buying ringgit. All those doesn't relevant. At the end of the day, we tie back to the Chinese yuan and also the US interest rate cut. Now, there are already rumors and also forecasts that because the last interest rate cut was 50 basis points, so there may not be any cut in November, but that is only going to be pending on the inflation that we see. So if the inflation is coming down faster, they will even cut interest rate. But if the inflation is not, then likely to stay. So we will see, I think, next week when the September interest rate comes out in here. But you can see last 2 weeks, this was sometime in early October. And if you go back, this is the latest one. The little dot that you see here is because the Chinese national holiday will close, and then no interest rate cut. You can see our ringgit rebound back to 4.27. I think we will touch back to 4.35 if more forward trend coming to no interest rate cut. So this is just a very short period where the ringgit strengthened. It got nothing to do basically with our Malaysian economy, sad to say, but that is the truth. So understanding this relationship will put you in better picture too. Now, of course, any interest rate cut, as I shared with you earlier on, the S&P 500 usually goes up, but for Malaysia, no impact. Okay, US cut interest rate, no impact one. For us, we need the foreign fund. We need the foreign fund coming in. Okay, so let's look at the financials, okay, based on to October 21. Right now, you can see comparing back to 1st of August, you can see here the ringgit still continue to strengthen. That is also backed by our finance. Now, going back to August, we only up by 1%. Still, technology, I am still very positive, at least for the fourth quarter this year. The technology and the construction, they're going to pick back up. Finance will probably stay at this level in here. So take a look at all the technology stocks because it's going to be coming back. Now, definitely one news is really driving the market will be the property development. Now, property development so far has turned red. Pentagon, keep an eye on this. There were a lot of positive news on this one, and the market momentum is swinging up. So you still have a little bit of room on property stocks. So use the VSA 360 property stocks to pick those before they start to move out in here, right? That's not too difficult to do. I think for our fellow member VSA, you want to do that. Right now, the VSA 360 is showing, right, consistently September month, which we ended 8 out of 8 negative. So October month, we will see breakout November, if not November month. So the next 3 months, Nora, I always tell Nora, Q4 2024 is going to be bullish, right? We got 11% here. I think possible we got another 3 to 4% to go up, right? On the reason. Okay, now this week we're going to talk about the Kanaga buy call. All right, so this is something that we want to showcase to you whether this buy call were legitimate or not. Okay, you can see TP as $3.80. So what I'm going to do now is to bring the charts up here, right? And all right, so we're going to compare them. So Dayang has a buy call on August 8. You can see August 8 is this bar here. So definitely someone knows something. And the market, Trade VSA, Pentagon Guider, actually turned green Pentagon on 27, almost 1.5 weeks before the buy call was given up by Kanaga. Then you have Bursa. Let's take a look at Bursa. This was another, is this a, oh, it's a whole call. Whole call means sell. Whole call usually sell. This was in October 7. 7 is this one here. Okay, October 7, by the time it reacted. But again, red Pentagon came out very, very early, before the sell one. RHB. Okay, RHB is buy, and it came out on the 7. 7 was this bar here. Yeah, came out on the 7, and actually the green Pentagon turned early on and then go through a selling. Now only it comes out. So who knows, you know, RHB may go higher. Let's take a look at PBB Bank. A buy call is also on the 7th, which is Monday, and it's already undergo profit taking. But usually like this, not so good. It's all going to depend whether the market can break 5. Hong Leong Bank will be the same too. Now, if you have any stocks that you want me to look at, right, feel free to pencil those in there. Also same, 7, Hong Leong Bank, then SL West on 3rd of October, SL West. So SL West 3rd of October was this bar here, and you can see the green Pentagon came in much earlier on the 20th September. Usually the buy call will able to make this stock sustainable, and then they will start to distribute before it finally came out. Okay, so next one is Samaden. Okay, and you can see Samaden buy call was on the March 3rd, which here, so 3rd of October, that actually causes the buy call to go up. Okay, so that was true, but the truth of it, it looks like market may just hold up. And then we have QL sell. Okay, QL sell. So QL sell, market's holding up. All right, that was on the 3rd. You can see 3rd of October was this call in here, but it does look like it's going ahead. All right, a market going up. So definitely you want to be having a green Pentagon to guide your market as the market go higher. Okay, so that is the buy call for tonight. So the emotion of the market right now, what do you think? Members, audience, what is the emotion that we see right now? What is the emotion? Confused, right? Anxiety. So it's also good to look into the market. Now, if you look at the market stages for the KLCI, which I've showed you before, it actually breaking the 1630, you will definitely see, what was that? The breakdown. We're going to see more stage 4. But then again, because of the pricing of our current market, the valuation, it's really, really reasonable. It's not that cheap. So I don't see the market going down. So the market's just going to move sideways, not going here, not going there. So that's why we find that sometimes this is tough to trade the market in here. The US market is where you want to be. All right. So make sure you get into the US market. And if you're not, then you're missing a big part of the picture, because US market is pretty predictable. Okay, and because it's pretty predictable, that's why you want to be in. All right, I think most of you who has been following me, I think my prediction has been very good, right? Knowing where the market is, and a lot of this basically falls back to having the facts in front of you. And if you have the facts in front of you, then you are likely to make money more than anything else. So okay, so these are the facts. So going forward, Pentagon guided, you have seen how we use that to power the market. In here, my SIFU and also the methodology you use, volume spread analysis, is used to power the Pentagon guider. And right now we have the digital investment advisor license that makes everything more legitimate. And going forward, I think it's going to be a very healthy system that you can use and ahead of many professional too. All right, so do join our VSA 360. We still doing our offer. Remember, our 10/10 sales is on. They will end, I think, tomorrow. For 12 months, you get 1888. Usually we go for 2688. All right, so that's something you want to be thinking. So once the sales is over, please don't ask us to give you back the sale. Usually we get a lot of people like that, right? And so we don't want that. If you think our system is good and you want to use it, please take this opportunity to sign up for our 10/10 sales. You can go to our website and pick it up in here, but I'm not going to be pushing too much of it. If you like it, use it. If not, you can go ahead and use SmartRobie, which is least expensive, only 10 ringgit a month. All right, trade over to US market with the weakening of ringgit, because ringgit is going to go up and you also make money on the US market in here. Okay, trade well and live well with smarter trading. So this is our VSA 360 membership in here. We have the 10/10 sales. Make sure you capitalize on that. All right, that was our CPE course. We did a pretty good course. And of course, right now, if you have any stocks that you want me to look at, right, feel free. If not, do join our Telegram stock chat room as I update you in here. And for our existing member, by the listening to this, you will get the fact that the market is definitely going to go higher sooner rather than later. Of course, the Q4 is going to be one of the bullish quarter to come, and you already know it here. All right, thank you for listening and good night. I'll probably do something on Friday. If not, I might take the day off on Friday. I'll see how we work on that one, right? Because now with the licensing of the for our company, my engagement will be more tied up. Thank you for your time and thank you for listening.